Why does the Bitcoin standard matter? For the first time in 100 years, companies have a capital asset, which is a commodity, not a security, which returns more than the cost of capital. That's the same as everybody on earth going from being a type 1 diabetic to having insulin to actually not being a diabetic. A type 1 diabetic will eat themselves to death. You can eat continuously forever and you will starve to death. And that's because you cannot retain energy. And companies are in essence starving themselves of capital. They're all negatively polarized to capital. They're repulsive to capital. They destroy all the capital they raise, and they're repelling it. The Bitcoin standard means your company becomes attractive to capital. You begin to attract it. The more capital you raise, the more shareholder value you create, the stronger you get. To ask the question, why does it matter, is kind of like asking the question, why does insulin matter to a world full of type 1 diabetics?
So there you have from Michael Saylor. We got more from Michael before this video is out. He's talking about why the Bitcoin standard matters. You can be looking at Bitcoin and other assets and comparing them. Don't miss this video. And getting straight to it, we see that the fear and greed index is still fearful. Are you buying the fear? When people are fearful, you should be greedy, and vice versa. When people are greedy, you should be fearful. Bitcoin, the current time it's recording, is sitting at 84.4. It's been nothing of out the norm of what's been going on since the 13th. Really, the past week we've been in this range. This range has been between 83.7, and we had a wick all the way up to 86.3 temporarily, but you see it. The range is clear. We're just trading in and out of this range. Looking at the RSI on the 4-hour, we came down, put a bullish divergence in, but look here. We have not got extremely overbought yet. So the bigger question is, are we going to have a continuation to the upside? It looks like if we zoom out, it looks like we could have broke out of this. You see, we put in a lower high, a fake breakout here, actually came out, broke out here, back test, and then off to the races. We back tested this 46 range twice now. The last time we were here, we were at lower levels, so this is, some type of divergence as well. When are we going to break out of this range? Will it be to the up or downside? That's still time will still tell. And then right here, look at this chart. We're just zooming out all the way from 2017 peak, 2021 peak. We have not got back up to these levels, which will take us up to 200,000 plus. Can we see that before the year is out? Right here, also, you see an all-time high, a falling wedge, lower lows, lower highs, new downtrend, and then a low coming in. We broke this trend line. Must clear for a change of character. Looks like we could begin ready to see some type of back test of the recent peak of this descending broadening wedge. Also right here, it has some type of bull flag that's playing out. Definitely seems like we could be on the way to see more upside versus downside, but prepare for both. Tech devs weighing in. The last 3 times we've been at the global business cycle bottom of this range, putting in higher highs, higher highs. Right here, what did Bitcoin do during these green dots? Blast off came, blast off came, blast off came. So what do you see? What is some similarities? It seems like every time we bottom out, this blast off has been getting shorter and shorter as far as time goes. Depending on if you look at this is the peak in April 2021 versus November, seems like the Bitcoin price blast offs tend to get more aggressive to the upside, so don't get caught off sides. Looking at Ethereum, Ethereum's chart is not looking the greatest. It's on the 3-day. We were in this uptrend from June of 22, and we came up, tested this upper bound, came up, back tested it. What is this? This is the McDonald's M shape, which is a bearish pattern. And look what happened. People were calling for retesting these levels back around this $2,200 range right here and expected some type of bounce to the upside. That did not happen. We fell through, back test, and how low could we go? The next levels to the downside to pay attention to is really down to the 1,200 range and potentially $1,000 range. If we do fall below that, we could come all the way down to $600 to $700 for Ethereum. Now, not getting too bearish, but we're just showing you this chart does not look that great. So without further ado, Michael Saylor is weighing in on this, and he's talking about Bitcoin versus other assets, specifically altcoins. Let's hear what he has to say.
I can't let your previous comment go unchallenged. I'm showing you how to build a 100-story building using steel, which is Bitcoin, a digital scarcity. To equate Ethereum and Solana to Bitcoin is like equating balsa wood and clay bricks to steel. And yeah, you can also lever them, but you can lever balsa wood, but you can build lots of things that are steel containers and you can use rubber bands, but it's not the same thing. So there's a reason that securities law prohibits public companies from capitalizing on securities. And the reason is because you can lever a security 100 to 1. And so if I actually issued 1% of the float of a security, I could take $10 million and create a $10 billion market cap company. And so you would literally have 10 million in the float. And then you would tell yourself you had $4 billion of collateral on your balance sheet after you levered it up. And then you would start to act that way. And then when the bottom of the structure comes crashing down, you get a situation like Terra Luna or like FTX. Both of those were examples of companies levered on proprietary tokens. And so Solana and Ethereum are they may not be securities, but they're definitely tokens. And as tokens, they're not a commodity. And so I would caution anybody listening here against levering up on a token, right, or a proprietary asset, because it's kind of like trying to copy my skyscraper and doing it with bricks or with aluminum or with copper, right? The entire thing's going to buckle and lots of people are going to die and it's going to be catastrophe and you're going to take out the entire city block. And that did happen. It has happened over and over again in the crypto world. Happens all the time. People think that they discovered leverage, and what I'm doing is not an intelligent or brilliant idea because I'm using leverage. The reason it works is because I'm putting leverage on steel. I'm doing it with the right material. I'm actually using a product which doesn't deflect, right? And so Bitcoin is a crypto asset which does not deflect. That's why you can lean on it with $10 billion of leverage or $100 billion of leverage. And if you do the same thing with FTT token or Luna, or pick your favorite token, if you do the same thing, you're going to find it will buckle at some point. And when it buckles, there's going to be catastrophe.